Welcome to Trading Lounge and the US indices for Wednesday, February 23, and starting with a weekly on the S&P, because I just like to sort of remind folks that the weekly stochastics is down here. Our target for the downside for wave 4 is 4,100. Can it be drawn to 4,000? Yes, of course it can. It's not a big deal. The current count that we've got with wave 3 here, an A and a B and a C wave here, or WXY here for wave 4 is still intact. That current low there on the NASDAQ has been taken out here, so it's probably highly likely that it will occur with this market as well. So in one way we need to look at it over here with wave 4 over here. How does it get from here down to here? Do we just count 5 waves down from the top here? Will it become more complicated in a larger bounce here and then down here as a WXY? These are the things that we need to try to figure out. So let's just go into the daily chart. Now this has been the original count here with a WXY here, and then looking at this as one with an A and a B and a C for wave 2. Now I have to say, like, why that stays in play there, and we looked at this yesterday, then the market can move up from this point. But as I mentioned, the NASDAQ has taken that low out there for that, but the NASDAQ has got some comprises of some stocks that are quite sort of bearish in that in their constituents. So yeah, so this is probably not likely as wave 1 and 2, but it doesn't, I can't rule it out just yet, but it's probably not correct. It's quite normal too for a market to, in terms of the trading levels, we've got 4 here, which is a medium level, then 1, 2 and 3. So we know that 3 is quite a strong number, so 1 is the strongest number, then 5, then 8, then 3. So we can also see that 3 has been, you know, supportive here before. So before it moves down through here, it's, you know, it's likely to get a bit bouncy here, and that's what we're seeing at the moment. Now on some markets this is the high, on some markets, say the Dow Jones for instance, but on this market this is the high over here. So if we're going to be counting down here, we would need to respect that high and look at that as a corrective move to that point, and then start to count down as 1 and 2 and 1 and 2, or maybe even 1 and 2 and 3 and 4 and 5, and we've got 5 waves here, and we're going to be bouncing up to the 61.8% mark, and then coming down into this space, and then going up here, and then extending this WXY out here further, just simply by putting the XY over here, the W here, and the Y over here for that, and then that would be in 3 waves here as an A and a B and a C. Now that's plausible as well at this point in time. Now I still think that the market is in a wave 4, and the 4,100 is our target area, give or take a little bit on this side. Can the market be counted as a top in place, and we've got a bigger picture to the downside? Yep, I've counted that here, so you can judge that and pull it apart and criticize it, or rather critique it rather. I mean, I'm always happy to take criticism, as long as it's constructive and somebody's learning something from it, be it me or whoever, whatever, but not abuse. No one likes that. But yeah, I mean, it's possible. Then that leaves us down here with a strong move down at this point, which would be wave 1 and back for wave 2. But yeah, it's possible. But we're not really seeing this crank down the way that it should be cranking down. If that, I mean, it's kind of just it's moving down from the tops, really, in relationship to the Fed's trying to curb inflation in using interest rates to do that. Bit of a Milton Friedman fan on that front, and but that's another story. So let's continue to cruise in. So yeah, let's just go to the intraday. What have we got here? So yeah, if we were looking for it to move down, there's different ways to count it down. And yeah, so I've counted this here. If I put the A wave here and then look at this as an A wave here, then an A, B, C, D, and E over here for a triangle for wave B, and then count 5 waves up here for wave C of B, and then look down as 1 and 2 here. And it's probably best to count this as 1 and 2 because it does overlap this structure here. So to count this as 1 and 2 and 3 and 4 and 5 here, it's doable, but then we would have to suck up that wave 2 overlapping wave 4 here overlapping this one. So yeah, I mean, even in this case here, when I've got this as 1 and 2 and 1 and 2 here, and having this as a third wave here, this fourth wave also overlaps here. So that may not be the case as well. So we may need to drop this third wave down here and look at this as wave 1 here, and then looking at this here as that move up there is definitely corrective. Okay, so I've pulled that apart, but still an A and a B and a C wave coming into the 61.8% retracement level from that high to that low as here, and then moving down lower from that point, still looking for this wave 3 here, and so would end up further down at that point. So there's a few ways that this could be viewed here. I mean, we can look at it as an A wave, a B wave, and a C wave here for the A wave, and then the B wave back up here. Also, what I wanted to point, the 4-5 here is really quite important. So if I come to a clean chart somewhere, maybe something like this here, that will do the trick. So what I wanted to point out here is just that the 4,500 here, you can see that, well, to me, it's really the sort of balance line within the correction here. So we're definitely at the lower end of the correction. And we're also on this, so you can just see here that it's kind of, well, it's important, isn't it? So if we found this as support up here, then it would shift the weight from being negative to positive at that point. So that's a number that we could use. You know, it's a long way away from the price at the moment. And also, but the price being down at the old lows here is going to find support and get choppy. And, you know, as just mentioned, we've got group 1 there as well, which is the 4,300, and then 2 and then 1. It's going to be, whatever happens, it's going to be bouncy through this scenario here. Yeah, and as also I mentioned, the NASDAQ has just taken out that little low just there. So it's highly likely that we'll continue down. It's just going to get bouncy. That's all in that little space. But I just wanted to point out the 4-5 because it was a nice, clean sort of balance line through all of that. And then, yeah, so let's just go to the, I've just been working a different tick chart here. So I'll just go to that. And let's bring in a bit more data here for that. So from the top we can look at it like that. I can still have the A wave here even if we have wave 3 over here as an A and a B and a C for the A wave, so that's okay whichever way you look at it. And this here has, well, I'll just take it from both. It doesn't really matter at that point, but we're still at the 61.8%. So as a B wave there, or wave X, that's fine, you know. But the question is how to count this down through here for this. So yeah, as I mentioned, it'd be logical to look at this as 1 and 2 and 1 and 2 here, and then this move down through here. Either as 3 and 4. There is a slight overlap there. Just it's very thin on the ground there, but yeah, so we've either got it as wave 4 or we've got it as wave 2. But as a wave 2, then the we need to see it pull up there a little bit high, because that little line there is the 38.2% retracement level for this wave 4. So that's kind of okay at this point. I think that's suitable, you know, just touches here a little bit, but that's the kind of behavior you would get coming into group 1. Let's just say for a moment that the market has a little 5-wave move up there, because that's what it would take at that point, and then turns. Then you know that it's wave 2 at that point, and then we can come down for wave 3, 4, 5 at that point, you know. But otherwise, if it just that definitely is an ABC correction at this point. So I've just been through that. So an A wave to here, a B wave to here, then 1 and 2 and 3 and 4 and 5 here. So that sits there quite nicely. So yeah, you can get 5 waves out of that, but also you can see you can get 3 out of it. But if it moves up there, it would need to build 3, 4, and 5, and this would be the A wave, the B wave, and the C wave at that point, if that's going to be the case. So if you wanted to short this, then you can just short it under this low here. I'd imagine that would be fine at that point, and just to get down to the 2 here would be, suffice at that point too as well. Yeah, so if it goes to that point and then comes down, you know where you are. The other point with this too, as I just mentioned, can we count this as 1, 2, 3, 4, and 5 down here, or an ABC for the A wave, the B wave, and the C wave here? If that is the case, then we're going to be going up higher at that point. So I have to map this out for us, because we can look at both sides of the market rather than just sticking a head in the ground. So in that case, that would come back up into this area through here. So this is also why I wanted to point out the 4, 5 here being the balance line through the market. We've got a trend line here, we've got this here. So even if the market came up to that point, it can still go down from that point. That's what I'm trying to say. So it's really only above the 4,500 here that we could turn bullish, and either we see a really good impulse wave to that point. But as I mentioned, that low here up to here, that is corrective, right? It's not impulsive, it's corrective. So that means that would still need to get another low here. So then it sort of makes it a little bit weird. So I think any move up into this space here is going to be corrective, and we'll see further downside at that point. So just be mindful of that. Yeah, so that's that. So that's about it really on that front for the S&P. The NASDAQ, let's have a quick look at the NASI. I won't go into the bigger picture. This is a tick chart here. We can look at this as wave 4, we can look at it as wave B, or we can look at it wave X here. With this, in this particular instance here, the main takeaways is that this low has taken out this low down here. It appears to be 5 waves here, but obviously wave 2 really overlaps wave 1 a lot, so we can't count it like that. We could count it as an A wave, a B wave, and a C wave down here for a WXY. So if we look at it like that, we could go a W here, an X up here somewhere to the 61.8% roughly, and then a Y down here for that. So this is very valid because of everything that's going on. So yeah, so that's doable at that point. The other point here though is that taking this top and taking this low and looking at the 61.8% at that point there. So we could say that anything above this then would need to look at that, and in that case we can take that high over here and then look for this moving further up roughly into this space here. So the 14,500 for X marks the spot. So it could go like that. But otherwise, because it's taken the low out here, it's just natural for it to bounce back this point. This also makes a nice A, B, 1, 2, 3, 4, 5 here for this, unless we can count that there. It's a 5th wave, a little bit small. Possible 1, 2, 3, 4, and 5 to that point, and then but this wave 4 is bigger than this wave 4, so it's probably not the case. Once again, if you wanted to short this, then this would be the logical place, because from that high to this low here, that's the 61.8% mark here. So that's that. So it's a bit of a ping pong going on here with this at the moment with these with those ratios there. So do we count this down as 1 and 2 and 1 and 2 here, and then 1 here, and 2 here for that. So it'd need to get up, it would need to make a move above that. Well, still got close to the 50%, so it's probably doable at that point, even if it fails at that point. And this is 1 and 2 here, and 3 and 4 and 5 here. So there is 5 waves in there's 5 waves in these structures here. So it's kind of, the whole thing is pointing lower. It's just how much we're going to bounce back on these. So yeah, and obviously to me 13,000 is the big number here for this. So it will edge lower into that. Obviously, between 13,000 and 14,000, we would have 1, 2, and 3 in here for group 1, and then the midpoint, the 5, and then we've got 8 in here. If we're talking about 8, we're talking about group 2, so the 72 in here, and then the 650 in here, which would be the lower end of group 2. And being at the 14,000 here, that, and then the group 2 below, it's the group 2 below's job to hold the market as support to the closest largest number. So yeah, if the group 2 becomes the resistance here, then you know that it's leaving the 14 at that point. The same with over here. So this is all of group 2 holding it, and it'll be group 1 to the upside too. So the 14,300 at that point. Okay, so yeah, just to round off though that situation with the NASDAQ and the S&P, it's likely that they're going to move lower, but they're just going to be a little bit bouncy at that point. With the Russell here, this is the old count here. So one of the important points here was that from the low here, we could count this up as 1 and 2, and then 1 and 2 here. So long as that low here, the 1960 stays in place, then roughly 1960 there, then the market is still bullish. Once that's got a clean breach of it, then this 3-wave move here becomes corrective at that point. So it would be 3 waves up being corrective, and then the market would see lower ground at that point, and we talked about that yesterday. There's probably different ways to count it, but either way, once that's breached here, then we'd be looking at that moving down to 1800 at that point. So that's that really at that stage. So why that low here, that would be a little, we could look at this as an A and a B and C. So that low right here, once that's breached, then that would be the trigger to hedge or short at that point on that low. Alrighty, I'll leave it all at that. Thanks for tuning in. Cheers.